All right, welcome back. I'm making another video here because I'm currently like kind of on like a change. So before in quarter one and quarter two, I was trading a high time frame discretionary model. Now, how that looks, it's kind of hard to put into an explanation because again, it was purely discretionary. Um, but what was it like? I just lost my train of thought. It was printing. It was printing, and because on the high, like so market is always moving in either accumulation, manipulation, or distribution. So I think quarter one and quarter two was a lot of that manipulating and distributing. So on the high time frame, price was making moves. You know, you can see on gold it was making these all-time highs. On NQ it was making these all-time highs. So trading on the high time frame with high time frame draws, high time frame for value gaps, and catching these overall high time frame moves was working really well for me. You know, I was printing payouts, I was doing all that, and then I came into Q like quarter three. It kind of started in April. March was my best month. I made three payouts. My best month, and then I had a big slouch. April, I lost my funding. You know, just because I took payouts with like my last payout, I had like $300 drawdown left. So I lost the accounts. I restacked. So the start of April was good, and then we got into this big slouch of accumulating. So like as you can see on here is on like the high time frame. So like the 15 was what I traded on. I always looked for a big extension leg and I tried to catch it. You don't really see that anymore, especially in Asia because I trade Asia mostly. I can't trade New York enough because this isn't really about talking about New York because New York's been making great plays for sure. But you don't really see like price making these big moves on the high time frame higher, and that's what I traded. I traded like high time frame. You don't see that anymore because price is not it's not pushing up or pushing down. So those on the high time frame, you get a lot of this. You get up, down, goes down a little bit, goes up, takes out liquidity, goes back down, and like you know what I mean. That model wasn't working, so I'm adapting into a mech model. And what the problem, and I'm slowly implementing all this mech model, and I'm doing it very slowly because I don't want to just fully change over to a mech model because then I'm restarting and then I'm back at like wherever the hell. So I'm slowly implementing these things, which what they look like is for now. You can see it in my first videos. I'm starting to look at low time frame, lower time frame draws and liquidity, not just those big swing highs, those session highs, those big equal highs. Like I looked like my trade today, for example, when I took that break even short, I was trading down to internal liquidity. But I'm discretionary, so I know how market usually does. I knew that in order for price to go higher to these New York highs, it was gonna take out some lows. So I'm trading to those lows because I knew, I've been trading for 2 years. I know that, or year and a half, whatever. I know that before price makes big moves to the big draw on liquidity, it's telling you a story. And that story is that price needed to go down, take out liquidity to then go higher. I would never look at that before. You know, with my old model, you know, I'd be waiting for this 15-minute inversion. I'd be entering off the 15-minute inversion, or I'd wait for this 15-minute to be tapped into, and like once it's respected, I'm in because that's what my high time frame. Obviously it's more difficult. Like there's more to it, but I wasn't looking at all these low time frame stuffs. And in these markets of a lot of accumulation, I've been telling myself the market's just not been providing. But it's not that. It's the market is not providing on the higher time frames, which what I used to trade. So I need to move my strategy. That's what trading is understanding what the market is doing overall and adapting your strategy to it. And that's what I'm doing by slowly implementing the mech model. So if you look at my trade today, I did that. I could go back like all this stuff I had on my chart I'd never had before. Because I'm starting to look at other things, and I'm also starting to add Alex has brought some stuff about my strategy that I'm starting to implement today. So after we had the 15-minute inversion, I didn't just enter right away. I waited for price to respect a 5, respect a 3, and then once I see all this shit get respected, I was like, look, so we get this 15-minute inversion, we get this 5-minute inversion. Usually I'd enter right away, or I'd wait for a tap into this 5 and I'd go higher. But again, today I looked on the lower time frames and I seen, okay, so price is respecting this 5 minute. So I drop down to a lower time frame. I see prices inverting on the 1 minute, and we're respecting this 1 minute. I'm bullish. That's it. So instead of approaching the market in what's my draw on liquidity, what is price going to develop before that, before it goes higher, I've been looking at it as, are we trading out of sell side liquidity or buy side liquidity? Not in the high time frame, not on the 4 hour, not on the 1 hour, but the 15. I'm looking, are we trading out of that liquidity? For this, yes. We were trading out of this. We were trading out of sell side. Then I'm looking, are these bullish fair value gaps being or are these bullish fair value gaps, bearish fair value gaps being disrespected? Yes, we have a 15-minute inversion and a 5-minute inversion. And then, okay, it disrespects. That's not telling me anything. That's just telling me price is pushing higher in this current moment. What I want to see is price respecting those bullish fair value gaps, which really tells me price doesn't want to go lower. Price wants to go higher to this overall draw on liquidity, which is our New York. So I see us respecting on the 5-minute. I would never open the 1 minute before, but then I'm looking for my entry off of the 1 minute. So I hop on the 1 minute. I see our 1 minute inversion and a 1 minute respect. So we're respecting 3 bullish fair value gaps, disrespecting 2. We're trading out of sell side, and we have a very strong draw on liquidity. I'm bullish, and that is a good enough trade for me to take. And then my discretionary knowledge tells me that that is a 9, because overall how market's been developing, how it's been looking, it's a great confidence trade. And on the lower time frame, I catch this trade. If I was trading on the higher time frame here, I would have my entry, once the 15-minute gets disrespected, I'm all the way up here, and then I either you wait for a retracement, you enter in then, and you get stopped out. But once you go on the lower time frames and you go deeper into that story, you go to you read it a little better, you're seeing, oh, we're respecting. So I'm gonna wait for that 5 minute to be respected, because no matter we inverse that, that's not enough. I want to see it respect, and then we get the 1 minute inversion. So it's just overall, to summarize what I'm implementing into my strategy is kind of maybe not even the MEC model. I'm not trading the MEC model. I am looking at the market as you'd look at it if you're trading the MEC model. That's pretty much it. I'm not trading the MEC model. I'm trading inversions like I always have. But I'm just looking at the market on how PB Blake pretty much is. I'm going to be honest. I'm learning fucking from this mentor now. He is, the way he tells you to look at the market, I'm looking at it. And that comes from, I kind of wrote it down. So you need to be, what are we trading out of? I explain what we're trading out of. Are we respecting? Are we disrespecting? Yes, we were. Bing, bang, shaboom. So it's kind of hard to put in to words, but I'm changing my strategy because the current market is accumulating orders. It is not manipulating. It's not distributing like it was in Q1 and Q2 when my high time frame model works so well. I literally I had an 80% win rate in the first 2 quarters. It literally was working so well. But then when market makes a shift and we're not trading how we once were, I need to adapt. And I wasn't willing to adapt, which was my big problem. I wasn't willing to adapt because I thought, this has been working. I don't want to change models, but I'm not changing models. I'm adapting to the market to make me more profitable. And it's not that far of an adaptation. It's just looking on the lower time frame, maybe caring about respecting of fair value gaps more. And that's pretty much it. So I just was kind of coming on here because my trades will change a little bit, and but I'm adapting to the market, and the MEC model works just as well during manipulation and distribution, so I'm not limiting myself like I was with my high time frame model. But that's pretty much it. I gotta shout out my boy Alex. He kind of put me, I know my strategy works. The problem is it's not working in this market condition as well. My strategy was printing in this Q1 and this Q2, but you just need to make the adapt, and I'm kind of explaining how I'm going to adapt and what's going to happen from here. But yeah, overall, looking at the market as PB Blake would want you to, really, how the MEC model, if you're learning the MEC model, first you got to learn how to look at the market. That's what I'm doing. I'm still have the same entries, all that. I don't really care about the MEC model entry. That's not you know what I mean. But yeah, that was just kind of me summarizing and really putting my stuff into words. And yeah, but I will see you guys around. And it was it's kind of past few days when I've kind of fully realized that my model is my model's not the problem. It's the market conditions this model isn't as profitable in. So I need to adapt. I don't need to change strategies. I need to adapt. And by adapting, we already talked about it probably 4 times, is going in the lower time frames and looking at the market how you look at it on Mega Model. But yeah, that's the video, and that's the longest video I'm gonna post like I've ever posted, just because it's like I'm not just explaining a trade. I'm explaining. Yeah, I'm done talking. I'll see you guys, and hope you guys all bang.